Well, good evening, everyone. A bit later than normal, 4 minutes past 6 on Friday, the 11th of June. Hopefully, a short video. This is the American market. It's 4 minutes past 1 across there, and it's having a reasonably good day. But the Dow's off 92 points. Nasdaq is up a smidgen, and the S&P off a little bit at 4 points. So all the measures of the trend on VectorVest are up, and the pointer is firmly in the green, saying that it's safe to buy stocks. If we have a look at the VectorVest market timing graph, we can see this. There's the situation. Let's put it up over the last 6 months. This is the broadest measure of the American market that I know. All 8,000 shares that we follow, equally weighted. I talked about the reverse divergence between the price of the VectorVest composite and the proprietary MTI indicator, and I was quite I was very positive after that. Now we're doing our best to push through these all-time highs, and I don't think going to do it today. So as you know, yesterday we had a sharp rise in American consumer prices, and that stoked fears of inflation. But policymakers insist that the increases in inflation will be transitory. In other words, won't last very long as the COVID restrictions are loosened. But the fear that a sustained rise in prices might force central banks to tighten monetary policy has certainly rattled markets over the last day or two. Kathy, who's the chief financial economist at Oxford Economics here in the UK, she also concurs that price increases, she believes, is stemmed from the reopening and supply bottlenecks. So the consensus seems to be that inflation will be transitory. That's certainly the message that the Fed is doing its best to get across. I leave all of that to the economists in your weekend newspapers. All I'm any good at is managing risk, and as far as I'm concerned, the trends on VectorVest are up, and I'm doing my best to stay in my positions, especially in the UK where I'm fully invested. I haven't done that much in the US over the last little while, and that's the S&P 500. And I've been in this all week, and I'm just about to get out of it now. A 6:15, it's time to in fact chill a bit. I've been in the trade all week, and I think I'm up 10 points. Just one of those weeks where there was no movements in the market at all. We shall see. Frequently we get a very strong close on a Friday, so we'll see what happens to the close on a Friday. If I actually go to the 4-hour chart, that's the 4-hour chart, and in fact I got into it Monday afternoon just before the VectorVest Q&A at 4224, and I sat in it all week, and my stop loss, I pulled the stop loss up finally from where it started off at 4199, 4198 or something. I pulled the stop loss up now to 4207, but I won't hold it over the weekend, and do my best to try and look for another entry on Monday, and I'll report on that at the VectorVest Q&A on Monday afternoon. These levels clearly very important. It's come back to kiss that level, and if it was not a weekend, I would probably hold it. That's not true. I would certainly hold it because the trend is up. It's making rising bottoms, and it seems to have broken away from this 78% retracement at 4200 that was in place for a heck of a long time. In terms of the stocks that I'm holding in the US, well, I'm not holding them. They're actually spread bets. I still haven't bought into pool. Apps is going well, and in a very quiet market, it's starting to move a little bit. up about $10 on that. Target is going the right way, but I haven't made any money on that. GDX, I'm in the money. My stop's at entry, but it's off today. We'll look at gold in a moment. That's the S&P. AIG is going okay, and Disney is starting to move okay. So no fireworks whatsoever. Those of you that have been trying to swing trade in the American market over the last month will know that pickings have been slim. That's just the way it is. Sooner or later the volatility will come back again. Whether it's up or down, time will tell. But there will be trades, just a matter of sitting and waiting for them. So let's go to gold. The gold market, well, when I switched on my monitor this morning, we were right here at 1901, 1902. This is a 1 hour chart, and as I mentioned yesterday, there are some very committed sellers up here because they've hit it. As you can see, the tails in these candles, that's not retail traders, folks. That's really smart money hitting the market here. If we put on my old fib, and from that high to this low, you can see that that's an exact 78% retracement, and market has come off that very strongly indeed. So I reiterate, do absolutely nothing until we see a daily close, not an early close, a daily close above 1904, and maybe the more conservative will wait for a daily close above 1915 to confirm that this market is running. Unfortunately, folks, if these sellers win the day, then we can quite easily see a down leg the same size of this repeated on the downside, which would take us down till about 1840. The assets that I'm holding, Polymetal and Pan African Resources, at a gold price of above 1800, they're still making one hell of a lot of money, both mines, and I'm not particularly worried about them. The share price might cause angst in the meantime, but I'm not particularly worried about them at gold at this price. So if we go back to the daily chart and rescale this and get rid of this darn thing, that's what's happened. There's this up run that we've seen here, and it's come a very long way, and certainly we can get right down where that leg and this leg are the same. That would get us down to about 1840, and as you can see, there's an old high there, and of course it can actually, even under a very bullish situation, pull right back to 1750 in the same move. But I think that very important levels. The low on this yesterday was I think 62% of this other range. So the Fibonacci sequence at work in this particular market in gold. So in the UK, well, as usual, I've done nothing. I'm going to have a long look at the portfolio over the weekend on weekly charts. The FTSE 100 had a good day today. I'm glad to see quite a few of the miners had very good days. The FTSE 250 also had a very good day, and I see there's another buyout at these levels. You saw the big deal that went on at BT yesterday, where some fellow has just bought 12% of it. I see the share is back. That pushed the share up considerably yesterday, and it's pulled right back today. So opportunity there if you wish. It doesn't rate particularly well on VectorVest. I'm not a shareholder in it, although I'm sure that many of you are, right from the privatization a lifetime ago. So we have this is yesterday's data, and everything's still positive on VectorVest UK. And if we have a look at the market timing graph, it's doing exactly the same as the American market, folks, doing its best to try and push through here. The buy-sell ratio off a little bit. I don't think that really matters that much, but we're trying to push through this particular level. It's been at that level for 1, 2, 3, 4, 5, 6, 7, 8 or 9 days, and right, 2 touches across here as well. Can it get through? well, time will tell. But if we are trend followers, uh, then I think that we have to be strong in the market, and I'm holding my entire position. I bought a few more Lion Trusts. I said I was going to buy them during the week, and I bought a few more Lion Trusts. That's the only thing that I've done this week. I see Games Workshop is off a little bit today. At least somebody emailed me earlier in a bit of a panic because it had pulled back a little bit. So let's see if I can find it here. GAW, it was off yesterday, so it broke the old high and now is pulling back a little bit. Nothing that strange about that, folks. That's earnings per share that has risen, and well, maybe let's get rid of all of that so we can see the wood for the trees. And you know, there's a high here, and the most natural thing in the world would be this market to pull back somewhere between this trend line, somewhere in here before going again. So I wouldn't stress too much about that. Certainly below this level, then maybe do stress a little bit. It's been I bought it last April, I bought it just here, I bought it just here, and I shall certainly protect profits on it, but you have to let them run. CCC has been great, and I need to buy a few more of those, in fact, because I got out of some of those a while back when it clipped its stop loss, and I sold exactly where I should have been buying in. Nevertheless, I followed my rules, and reasonably happy with that. Momentum is falling very strongly in Pershing Square. I'm still holding it. Cranswick looks great. This is another that needs to be watched. She'll see what it's done today. She came up with the miners, and as you can see, the portfolio turned around a little bit in the last day or two. So if I resort that by RT, David, if I sorted by RT, Cranswick is the top. CCC. Halma's had another big day today, folks. So if we look at Halma, and this is a share that I've had since last April. It hasn't been easy going. So I bought into it. I don't know where it was, somewhere down around here at the confirmed up. Yeah, just here. Maybe a bit before, in fact. It hasn't been easy going, for sure, at times, and if you remember, I did an awful lot of apologizing for the performance in this area, but it would seem to have broken, and broken strongly. There's the 5-year chart, and as you can see, this hasn't put a foot wrong. 1, 2, 3, broken in the 4th attempt. That's always a good sign. So I'm hoping that that's going to, in fact, keep that going. And as you can see, there's earnings per share doing the same thing. There's a change at the top in Halma that always makes institutional chappies a little wary, but this performance has been magnificent here, and I see it's well up today. So I'm reasonably happy. And I have to watch KNOS, that's for sure, but when you've got a portfolio that's well up and well ahead, it gives you a little bit of leeway to in fact maybe give them a little bit of space. KNOS, the chart, especially the weekly chart, if I put on a weekly chart here, weekly over a couple of years, and put on volume. Where's my volume? The last 3 weeks, there was strong accumulation in the share off these lows, and as you can see, as it pulled back on falling volume. So there's a trend line at work here. The numbers just could not have been better if they tried. They really couldn't. Market's been hard on it. So I think I need to be strong here. It's at support. There's a confluence. There's a 78% retracement. There is a trend line. There's a series of old highs here, all coming in at once. Just need to give that a little bit of space. We'll see what the volume was here at the end of the week. Remember, this is Monday to Thursday's data. We'll see what the volume is at the end of the week. I'll go through these on Monday afternoon. Slovenia is still hanging in there. And the rest of them looking good. Both builders got knocked a little bit. I've got plenty of leeway in Bellway, but no leeway in Persimmons. I just need to be careful there. I maybe bought it a little bit late in the cycle. I don't think so. JD Sports is up a little bit today. Again, there was a chap on the email very concerned about it this morning. So folks, all is good here. We just need these markets to break through these old highs and make a decision for us. They've come a very long way, so we all must be very careful in case they turn against us. I still expect another run, in fact quite a strong run, but I will manage risk and do my best to try and obey what the front page of VectorVest tells me, and the front page of VectorVest UK is telling me that I need to be strong and brave and let my winners run. So folks, Monday afternoon, 1:30, the VectorVest Q&A session. We'll go through all of this, all the metals, the stock markets, and it'll take me about 45 minutes. Those of you that are VectorVest members, you should get a link. If you don't, email me. And anybody that's listening that would like a look, then also email me, david.paul@vectorvest.com, and I'll send you a complimentary invite. Thanks very much. Bye-bye.